Hi, this is Elliot Wave Sage. I'm going to go ahead and start the live stream. And like I always do, for those who are going to watch it after the fact, this isn't financial advice. Always do what's best for you. Watch this for your education and entertainment purposes. Any of the trades that people ask about, doesn't mean I'm going to take them. Doesn't mean they're good ideas. Doesn't mean that what I say could happen. You have to own your decision. And if you lose money, that's going to be something you have to own. And you have to ask yourself, why are you losing money when the market is giving you so many good setups? And what I would tell you guys is we have a very tradable market right now. The indices, you should kind of erase those from your mind because there's so many individual stocks that have been so lucrative when it comes to trading. It's been just so lucrative, and I would say that that's where I would be looking for is look for those setups. Look for setups. Um, that's how I would that's what I would look for. So anyway, let's take a look at what we have so far. And of course, if you got any questions, I'll answer those. I'm almost at my 1,000 subscriber mark, which is good, and not losing a lot of subscribers. I know lost a couple when I notice people want to only listen to the narrative that they believe in, even though the data in front of you is telling you otherwise. And I'm trying to tell you guys that yes, the market is going to drop, but we don't know the future. We don't make the market. We don't have enough money to push the market up or down. We just go along for the ride, and whoever's in control of this market may still want this to go higher. And we have to accept that fact. So when the data changes, you have to kind of change your strategy. And again, if that kind of news bothers you or makes you angry, then maybe trading isn't for you. Maybe trading is not for you, and you'll be better giving your money to investor, financial advisor, so you don't eventually lose all your money because you have to shift a little bit in your thinking. And that's why my thinking, until proven otherwise, is going to be buy the dip type thinking. But I do want to see violent pullbacks. This isn't a violent pullback, what happened on Friday. I mean, I wouldn't. I'm looking for 800-900 points lower to buy the dip. And as you could see, the Dow is up in five here, 1, 2, 3, 4, 5, and we have a 1, 2, 1, 2 count. So could this drop more? Sure, right? So this broke this high here, and it's opened up more upside, and that's what's going to probably happen. And here, as you can see, this entire cycle corrected with no divergence. So this whole cycle corrected, and now we're in this cycle. So the market wants to go higher, despite whether it should go higher. Logically, it shouldn't go higher. Your beliefs don't matter to whoever's pushing this market around. They want it to go higher, and that's what this is showing. Now, if we do get a pullback, a deeper pullback, these are going to be buying opportunities if the setup is clear. So like the SPY, again, I'm just looking for, I think this is going to be a big area of resistance at 451. So it seems like to me it's just going to kind of chop around and get there, and then we'll see what happens at 451. And again, if we look at the SPY, it took a three-wave move decline. So we may actually rally and make a new high again here. And I expect to see this kind of drop, up, drop, up, drop. And that's how I expect to see the market. So I just kind of showing you how I'm looking at the market. And I believe when X is in, it'll be a massive down day, circuit breaker down, and then that will introduce, and the bear market is back. and that's how this will eventually conclude this final move. Uh, Technology on the bigger picture, uh, I I'm toying with changing my forecast to be a 1, 2, 3, 4, 5, and then a massive crash back down to 156. And the reason I think this could happen is how we're coming out of it. We already have tech stocks making a high. So like Apple, Microsoft, and Nvidia, I think they're in wave fives of their grand super cycle. So this more than likely will do that too, is my thinking for the technology sector. And right now it's in just 3 of 5. But I mean, uh, I don't think it's going to be a whole new bull market, though. I think it's this. Another explanation that makes me start to think that it could be a 3 and a 4 is if we look at this 4, it made a perfect 618 retrace, which is almost what I see in wave 4s all the time. So perhaps this is now where we're going, despite the divergence on the bottom. Sometimes that isn't 100%. Uh, um, it is nothing's 100%. So I think to be this is kind of where I think we're going. So perhaps this when technology hits 445 is when the indices are ready to crash, and then perhaps at that point the SPY is up in this area. Like maybe these don't make new highs. There's also been this talk of 1987. Oh, it's a 1987 fractal. It's funny, I noticed that way before those posts. You have the same setup as 1987 here, even the same RSI. And then, but the difference with 87 is you had this bunch of this consolidation and it popped up and then crashed. We don't have to pop up, and I believe we're going to get that. We're getting that pop up. So I do believe the Dow is going to go higher, and we're going to pop up around here, 36,000, and then we'll see where technology's trading, and perhaps both will sync up, and then you'll get the historic crash in October, later in October, which is when the markets normally drop hard. And then that also goes for the IWM. So the IWM has a lot of fractals where you get a drop, a consolidation, and a pump and a crash. So it's the same thing. So it wouldn't surprise me to see this pump and crash later. So despite your views and what you thought could happen or should happen, or maybe I'm so smart I need to short these valuation, it doesn't matter in the end. It doesn't matter what you think. You just have to trade the setups and not get emotional about it. And getting angry with me isn't gonna matter. I'm just gonna block you. So I'm already getting people angry on Twitter with me, and if you do, I'll block you, and you're gonna miss some good setups if you're blocked from me. I posted Celsius on there. Of course, everyone's like, oh, go long Celsius. But I said to go long Celsius at $80, guys, way before anyone saw. I said to go long Domino's Pizza in my video, and then Kramer's all he could talk about was Domino's Pizza. But I guys gave you that way before. So if you follow me, I'll give you these tips, things that I am seeing, and you'll get that. But if you want to get angry because this goes against your personal beliefs when I'm showing here, you'll be blocked, and it's that simple. So I'll go to your questions, guys, and see what you guys have. Bitcoin. Yeah, I think Bitcoin is going higher. I mean, I got a lot of reasons why, but I think the first reason is you have an impulse up, which usually means you get another swing higher. This decline has a lot of overlap in waves, so that means the trend is up, not down, right? Overlap in waves like this mean the trend is in the opposite direction. As you can see, no overlap in waves. So the trend is higher. This is counter trend. The other is the dollar wants to go lower now. And if the dollar goes lower, that means this is priced in dollars and it should go higher. It's just so many things. And then I mentioned, we wanted it deeper. but I think it's too bullish. And if it's in a wave three, and what if it is a wave three grand super cycle? What if then this thing is gonna freaking go boom? I mean, it's gonna go crazy, and you want to be on that. You want to be part of that move. So that's why I was aggressive buying it. And yes, it's nice trade. I'll be holding for to see how this whole cycle plays out. I won't sell out of it early. So even if we get up to 44,000, I'm gonna let it ride, even if it because there is an alternative. And again, this is the bearish case where it's an A, B, C, and then it's just like a massive drop to zero essentially. And I'm just gonna hold it. So, smart. You could take some profit on this rebound, but I'm telling you, there's no guarantee. Especially if it's a wave three grand super cycle, it may just blow through that level with all the FOMO and people not positioned for it. So, like I said, and then off this low here, it looks clearly five waves to me with divergence. So this also should mark the bottom with a five-wave move off the bottom. So to me, it looks like there could be a pullback, but more than likely that low is in, and you have some kind of impulse there. And now we should be pulling back. And if you're like, really aggressive, and again, this dip may be done. It may already be done here, but perhaps it isn't. You could get another chance at 26,000, 25,089 to get long. But it may not give you that opportunity. A whole cycle correct it. Yeah, I mean this could still go deeper. So still could still drop. Could still drop more. So do what's best for you. But I think this is kind of the look. The only other alternative it could be is a really unusual structure where it's a WXY and we go back and we actually get down to this 23.6 level, but it's not looking likely at this point. I think I was looking at the daily RSI too on this. So on the daily RSI, we're about to break it. Once we break that downtrend line, I think that will confirm the correction's over, or this cycle's over. This and then a bigger bounce should happen of some size or new highs, and then the rest of crypto should just follow suit. So, and what was the clue that this was happening? And I showed you guys another setup, GBTC. Right, GBTC had a nice healthy day on Friday, and it was great. Here again, it was loading up and then an explosion. I think it's pretty clear to say that's done. So again, this is where we're going with it. This is the charts, and again, it's 5 up, so we should see a swing into the $27, $28 range on GBTC. And now we have a pivot at 1282 to trade against. So if you followed me, you would have got this set up. If you watched my videos, you would have saw it. And if for some reason you didn't want to buy it, you just got to change. You got to look at. You got to try to understand. You can be bearish and bullish at the same time. I am bearish on long term on this stock market, guys. It's going to have a massive bubble. We're in a massive bubble, but can it continue higher? Sure. And I think that's what's going to happen. It's just going to get stupid crazy, stupid high, potentially in some sectors, and that's just I can't control that. I mean, I was looking back at the Dow, and someone's like, if you were trading back in 1994, right? If we go back all the way to 1994, going into that year, like just look at the market in general. You came off of an 87 crash that everyone remembered, and then you're traded in here, right? You're let's say you're a day trader, and you're traded in this congestion here, scared, and then look what was to come. I mean, essentially straight vertical. Look, and I just keep going. I mean, who's to say the market's not going to do something stupid like this? I mean, no one would have believed that that could have happened back in 1994. And we knew the internet was coming out and all that shit was happening, but no one thought the market would go get this crazy. So we don't know. No one knows the future. And so people trading here had no idea that was coming. And of course, there was major inflation, right? Like, shit was getting expensive, but we don't measure inflation correctly in the United States. It's not measured right. So, guess what happens? Since it's not measured right, everyone thinks inflation's kind of in check, or maybe it's a little hot, but I mean, this just masks the problem. So, I'm just kind of showing you these markets can pump, and inflation can get really out of hand, but not measured properly. So then it doesn't look as bad as it really is out there. But this could just keep going. Here's a channel, and we need to be in this channel to be bullish. Once the channel breaks, I believe it's all over, game over. And then I do think that the tech is coming up here. But anyway, let's keep going. I want to just look at your questions on it. Zoom. So I saw Kathy Wood bought Zoom recently. So that was she's been calling the floor on some of these stocks that have been falling. Remember, she was loading up on DNA, and then it finally pumped. So I think you got to respect that a little bit. That it is in my buy area. Make my swing count maybe off. So let's look at the RSI and see. So we're in this fifth wave. Okay, so we're in a fifth wave. So it shouldn't need a lot more downside. To me, it looks like 1, 2. It doesn't look finished. Maybe I could say it's some kind of end in diagonal in 3 waves. Maybe that could be that. But obviously, it seems like this whole move needs to correct higher to 134, 143 at least. But maybe, look, we even have gaps up here. So let's look at the longer term RSI. So as you can see, we're in this massive bullish divergence here on the weekly, showing it's an impulse down and a fifth wave. The monthly started to curl up here, open up, open. It looks like, to me, it looks like it's ready to run higher. So I think the best strategy with Zoom is to start dollar cost averaging into it on any pullbacks and be patient. As you can see, it looks like kind of this wedge-like looking thing. Once it comes out of that, it should start to, and it would create a new bull cycle, a connector, or maybe a new high. Maybe it goes back to its highs. I don't know. Who knows? Yeah, I mean, the ideal buy point would be at say 58, but that's probably as low as it gets. And you have 3 down. So if my guess is if it breaks 72, then the correction's over. It's going to run. So I think once it breaks 72.30, it's going to come out of here. I don't know if it has any catalysts out there, but perhaps Kathy Wood buying it is enough, or the Russell will rally. I don't know. So let's see here. Let's see. You guys have any other questions on that? INJ. So I haven't looked at some of these other altcoins lately, and like I said, a lot of my charts are a little different here. So this is too big to be a 4 wave, so we can't call it that. Let's take a look. So it's been bullish, right? 1, 2. Well, maybe it is a 4 wave still. Let's see how deep it went. Yeah, it's too deep for a 4, but it has bullish divergence. So it was just an extended fifth is all this was. It's more common in crypto to get that and see you have a lower low and you have a connector here in 3 and an extended fifth. So I would say down it should go lower, but it's definitely a buyable dip. It should have another swing higher. This would bring it to 386 into this 284 area, and then it should have a whole new cycle higher. And I do think that makes sense because if that's the 4, that's typically where it pulls back. And when I look at this, it looks to me like that. And then like that. So that's what I'm thinking for this ING coin. Now, if we could still be in this connector wave, so it's really tough. But if you're trying to get long, you want to be patient and wait for this entry here, which would be a really good dip buy opportunity. Yeah, the QQQs may go. I mean, again, I don't know. Again, it's just like the triple Qs. I mean, technically, by Fibonacci's, if it's a 5, it should run out of gas at 457, 460. But if it's Moon Boy, like blow off hyperinflationary top, you know, shit gets out of control of the Federal Reserve, and it becomes why more Republic Part 2, then this is going to be a 1-2, 1-2. And this is Moon Boy. And then wave 3 is just going to go use to your imagination. I mean, just use your imagination. So, um, I mean, that's the Moon Boy scenario. Although it may feel good to be up here at Q's at 1,000, but if a loaf of bread costs $20 and gallon gas is $20, no one's going to give a shit. You have the triple Q's at 1,000 because you're not going to be able to buy anything with your money anymore. So that's what you got to also think about too. Is like, oh, it's going to pump and Bitcoin's going to be $1,000,000. But hey, if a Ferrari costs $1,000,000, or whatever, well, what the hell? What the fuck? You're not going to be able to spend your money. So it's kind of irrelevant. So it's always, what is your rate of growth relative to inflation, right? Your nominal rate and your real rate of return. So I think that's going to all come into play as this thing keeps pumping because I doubt we're going to get deflation and this thing's going to keep going. So I think what's supporting this market is inflation, money printing, liquidity. Japan's flooding the market with liquidity. That's why the yen is tanking. So the central banks, I think, maybe they've already lost control and they don't even know it. But by the time they realize it, it may be too late. So it's just kind of a strange time we're living through, and I know people don't want to believe that or hear it that we could have that kind of inflation, but but the charts are telling me otherwise. I mean, they're telling me otherwise when I see shit like this pumping that has some stuff no value, very little earnings. I mean, it's just telling me that. And then when I see, once I see the metals start to pump, like silver, once silver breaks $35, $40, that's got to tell you there's something wrong out there. But then I do think silver is going to come up to this area, up to this $30 area or beyond, and a squeeze. So I think there's some massive inflation coming, and we'll see. And then Bitcoin, of course, would be awesome to own during inflation. I mean, so we'll see. Um, Broadcom. Okay, I'll take a look at Broadcom. I don't know if we've ever looked at that before. I keep a list of everything we have. We've never looked at that one yet. Okay. Let's see. AVGO. Yes, is that the semiconductor. Let's see, lost my indicators. All right, so you got divergence. There's your cycle reset. This peak never took that peak out, so it's not an ideal wave 3 and 4. In this RSI is higher than this one here is higher than that. So you have to say to yourself, it's in a wave 3 of 3, right? So it's definitely bullish. Uh, yeah, it looks like some kind of another 1 2 1 2 here. And then this is probably your first 3. So it probably hit $1,000 somewhere in this area when all this is done, all said and done, before it peaks out, somewhere in there. So it's a viable dip. So let's just say it decides to take another swing down and full people. It's a viable dip, but not here. At 745. So if you want to get on this, this is the zone to do it. This would be a deep pullback, but if not, you'll have to chase it, which I don't ever recommend chasing stocks, but that looks like a flat here, A, B, C. So it's got more downside at least. It could probably come to 845 here, but this looks like 5 up. So the chances of this happening is probably not going to happen. So I don't want to get anyone's hopes up. My thinking is it's probably in wave 2 of 5 right now, something like that. And again, two can be done. It's getting deep. The 4-hour. It may be correct in this whole cycle. If it does, then it will hit this 733, and we would call this 3 up here or something. We'll have to relabel it, but I still think it's a viable dip until you get to this area. So then I probably wouldn't buy it anymore in the dip. Buy the dip on this. Yeah, well, at the time when Meta was 90, it did look like that's where it was going, and then the data changed and the forecast had to change. It's just like here. So right now this forecast looks like it wants to go to 1200, but of course the data can change and then it changes the structure, and that's why Elliott waves is not the Bible, and it's not like scripture, holy scripture that must be followed. If it was, everyone would be rich. It would be easy. So you just kind of play probabilities, and you just like look at the market through that lens, and you make your own decision. So you just have to take the risk and know when to stop out. So like if Facebook, if that was something you really wanted to invest in, you could a dollar cost average in and known the downside risk was 20, so you could lose half your money easily still. So you just have to, you bet what, you have to bet and dollar in what you could, and then as it turned up in 5 waves, then you could get more aggressive with the pullback and buy in more. So you just got to trade the data, and that's how this market works. And yeah, I mean, there's a lot of being right, being wrong isn't really matter. It's just about what you do and how you take your risks and how you change based on the data. And a lot of people can't. They can't change once the data shifts. It's hard for them to do that, and that's how they lose a lot of their money, and or they miss out on moves. Is they just can't change because of their emotions, and so, and again, uh, this could happen. But if it decides to swing down here, what if it's a corrective bounce, right? What if it's just 3 waves, a massive 3 wave move, a corrective bounce? It could be. And then it could come all the way back down to 440. So how would you manage that? So you're going to go in. Are you going to go long here? No. I would buy in at 742 and have a stop loss at 658. And if it did if a crazy drop, I would be stopped out, and I would be defining my risk, how much I'm going to lose, and I'm going to wait patiently for this entry. If I don't get it, I'm not going to chase it, and then you just have to go find another thing to trade. So that's how you trade, guys. That's how you trade. But anyway, let's look at Baba. Baba should continue higher if the K web is not going to go back down. It doesn't look like it. It looked like the K web is going to go higher. Um, so it's calling this 1, 2. So the question is 2 done here, or can it push lower? No divergence, and 3 wave reaction, and you have divergence here. It's really ugly. I mean, it can go either way. This could be a connector wave for this move down. I mean, I would say I don't have a good forecast on BABA other than, I mean, if we look, this down cycle's over, so you're clearly going higher. So this I don't like calling the low here, but I mean, I would say right now it's just buyable dips in 3 waves until you get stopped out of that. So the next buyable area for BABA would be around $90, $89 here, with a stop at 88. So that's how I would look at BABA. I wouldn't worry about is it going to go or higher. I would just say short-term trader. I would not buy anything here. I would wait. If it dips to 90, buy it with the stop at 88 to see if you can run it higher into the hundreds. If you stop out, dump it and just go trade something else. And if it just keeps running, I wouldn't chase it here, because this, again, it just doesn't, it's not clear to me when I see this, the way it bottomed. It seems risky to try to chase this, but I think you could still trade it as long as you have a stop loss here. BKW, okay. Oh damn, what happened here? So that's a 1-2. Yeah, so it's Bible dips until this area. Um, I don't think it's a 3 here. I don't think that's a 3. I think it's another 1, 2. Oh man, look at that. Yeah. So I don't know why it crashed like that, but it looks like to me that's done there. So that's the pivot at 139. And again, it's by the dip against this pivot, and it looks like it's 1, 2, 1, 2. No divergence. Something like that. So it should still grind higher. The ideal case is when this finishes at some point, and it will. You'll get a nasty pullback again. Then you can really take a bigger position in it if that were to happen. But it could keep extending, and that's the thing about these some of these V bottoms. They just keep pushing higher and higher, squeezing, squeezing, squeezing. So if you get a big dip, it could be worth getting in on this on the long side. And then I think as long as you're above this 140, it should still keep pushing higher. All right. My Twitter is Elliott Wave Sage. So if you go to my Twitter, go to Elliott Wave Sage, you'll find it there. NVIDIA is, my thinking is it's some kind of wave 5 off a grand super cycle. And I hadn't seen it recently, but let's look at the bigger time frame. Yeah, so I have something like this. So massive divergence. So 5 correction, and now we're coming up in a new cycle right here. So, and we have divergence. Coming out of 5th. So we're in the 5th wave of this cycle. So I would keep an eye on this line. You see that line on the weekly RSI. When that breaks, then this is over. This move should be over, and we should probably come back and at least fill that gap, and then keep pushing higher. But this is actually, I'm sorry, wave 3. So this is 1, 2. So we're in a wave 3. So again, does this, and I know it makes no fundamental sense that this could keep going higher, but the technicals show that it can, and it will pull back and then hit a massive 3 of 3 pump. So if that happens, obviously the markets are going to be supported. But the question is this too, when it comes, how deep is it going to go? I mean, it could go all the way back to 160 even. We don't know. So this too is going to be really painful, I think, when it happens. But it should, my guess is it's still got more upside. My guess, you see the 4-hour. Yeah, maybe not. I mean, maybe one more marginal high. I mean, so I think it's a danger mode. I think Nvidia is in danger. So this could be also a warning sign for the technology sector. There could be a much bigger pullback on the horizon. but also it's a buy that but that pullback, while it will be nasty, it will be a buyable dip across all of technology, and it makes sense because that missed the move are going to want to get in, and they've been looking for an entry. So I do think whenever this happens, this too happens, that's a buyable dip across everything. The question is how low is it going to go? I mean, since it's a two, it could come all the way back. I mean, down to this area, which if it did, then you're talking the retest of the October lows in the market. So I think it's tough to say how deep the two is going to go. Probably fill the gap at least, my thinking. But this also kind of, lets me know that either the five is going to extend, or it's almost finished. So it's tough to say. I don't know. I think knowing how extended technology is, I wouldn't be surprised if this is what we're going to get. Something like this is on the horizon. Is on the horizon for Nvidia, but you can't rule out an extension. And if it does, then that just is going to extend it. So you're never going to be able to top tick this short, I don't think. I think you're just this gamble. But I think the best strategy is to kind of, wait and then see when, if you can get in on the trend on this too. But I do think, it's a 1-2, 1-2 in the making like that. The reason I don't think it's a expanded flat anymore in a two like this is because it's impulsed already. We made a new high, and I think I mentioned that. I said as long as this high held at 418, it was an expanded flat. But now you made a fifth wave that negates the expanded flat. So now it's something more bullish. And again, it's the data changed. It's just like, hey, the data changed, so now the strategy needs to be I would be looking for a really deep pullback to fill this gap, and then I would be looking to go long. I'd be looking to go long. Whether you think it deserves to, it should, it's too overvalued, I don't believe in it, it doesn't matter. The technicals are showing that this should have a bounce. And the next bounce is going to be a wave 3, which is usually a lot of nice, easy money to be made. So something like this is what I'm thinking. So this is an important one to know because Nvidia's been leading this market. Why is it that calls but analysts keep saying the market can't go down because of put options? Well, I mean, I think some people say as soon as the market starts to sell off, everyone goes into puts, and then it comes self-fulfilling prophecy that it stops going down because everyone's hedged, so they stop selling, right? Because now they're protected, so they don't sell because they're going to make, So I think some people think that puts is like the reason why the market never crashes, because people just rush in the puts, and then it stops, the selling stops because the market, no one will sell their stocks when they have puts, right? If I have puts, why sell my underlying positions, pay tax on it? I could just make money on the puts. So that's why I think people think that. But we all saw it in March 2020 that didn't matter because puts printed, short ain't printed. I mean, it was the most money I've ever made in the least amount of time because the side of the trade to be on was so obvious given the situation. Like I said, I think that was a rare anomaly in the way this market trades, what happened there. And I think whoever's the invisible hand that holds the market up was even overwhelmed and wasn't able to do so. And I think I've said on my live streams before, I heard a clip from Ben Bernanke in April 2020 when it was all like everybody was really upset. It was like at the lows, and he got on some TV show and said, we really need to study what just happened because we have mechanisms in place to prevent this that failed, this being a large drop that was persistent. And he said that this type of decline shouldn't happen in this time or time period that we're in right now. And we need people to study and research what just happened. So he said something like that. So that got me thinking, there's somebody controlling this market, trying to keep it from dropping or protecting it. And but what it also told me is when everyone wants to leave the market, it can't be stopped. Puts everything. So the whole system will come unglued. So I think if the news is dire enough, that the market's going to still crash. And so, but the problem is you need news. You need a catalyst. Catalyst would be Taiwan, is taken over by China one weekend. The markets will be limit down. I mean, there will be no doubt about that. Nuclear bombs go off in Europe. Market's going to be limit down, won't open. I mean, you're going to need news like that. New disease gets released that's lethal within 24 to 48 hours. Markets are going to be limit down, won't ever come back up. So, I mean, that's the type of news I think is going to need to come out, or something we haven't even thought of. AI, gets out of control or something, and somebody hacks something, the internet doesn't work anymore. I don't know, but I think without the catalyst, I don't think the mechanics of the market allow these kind of catastrophic sell-offs unless there's some type of new news that drives it. But then of course people buy calls and it pushes the market higher because the dealers have to hedge that with the buying the underlying stocks. So that's the oldest trick in the book that people have been playing on the last 3 or 4 years. The players that can actually buy enough calls to do that. I think SoftBank is one guy that's done that before. So let me see here. MVIS. Okay, I'll take a look at that. I've never heard of that ticker. LM. Microvision. I think I have heard of it. I don't remember why I heard of this. I'm not sure where it came up. But you see the divergence is erased here. So that's the low. So you're trading against this low, and clearly it's 5 up with divergence. So a massive impulse, and then another bottom, and now it's come out. So it's buyable dip for sure. Yeah, I'm probably going to read a little bit more about this company because it's a buy against 181, and if it is, it could have a nice. This could be a nice bullish cycle that just got started on it. There's 3. There's your connector, and yeah, that low held. So actually, you're trading against 430. So I mean, if you went in and bought it right now, you could put your stop at like $4 and play that and see if it holds. If not, this is a very shallow connector, and it'll be a much bigger drop if it were to. But it's a buyable dip, so it could be a market buy here, and then run with a stop here at 428.5, and then if it does break that, it could enter a new bear cycle. Would probably be 5 waves down, and it would mess this chart up. If it breaks that low, it'll probably do something like this, and then bounce and fail. Something like that, and then go down again. So as long it's possible to keep going if it can hold this. It's getting kind of close. It does look like 3 waves up, so I wouldn't get your hopes up. It looks like it's going to break, and if it does, then maybe it's a flat. I mean, I guess you can't rule that out. Yeah, I think it's tough to time. I don't know if you can time this. I think the best thing to do is, hey, you're 50% off the high, and I would just start laddering in on it, and just buying a little piece of it, because if it's gonna go higher, what's its market cap? 794 million. Yeah, we'll keep an eye on that one. Okay, so I think it's tough to say. That could be the bottom right there, though. If it breaks, there's a high chance that it will bounce and fail later, but I would still think you'll get a bounce, so it's probably worth taking a piece of that. And then the buy area would be 409 to 369, somewhere in there. And then you could play the bounce. You could play a bounce, and then if you're lucky, it was a flat correction and you get new highs. And if you're not lucky, you play a bounce, it starts to pull back, and then you just take profits and get out of it. Cool, yeah, do that. Join Twitter, Nat Gas. Yeah, Nat Gas is going up. If oil goes up, Nat Gas will go up. I believe if the dollar is dumping, oil will go up, which means Nat Gas goes up. So I think that's kind of how I'm looking at Nat Gas right now. Yeah, GPTC was a great pump, and that could be a major cycle low that you were able to get. If the Bitcoin cycle keeps moving up, like people that having and everything, so you may not want to sell that until the next cycle peak. So that may be like an investor position that you're able to get on GBTC. So we'll see. I don't plan on selling it. I was mentioning I was looking for longer term holds on crypto. I already traded up on the first pop, and I wanted to get back in on that trend. And then Chewy is like a meme type e-commerce play that I do like, just to grind higher and pump, and so I want to hold that too for now. In the wave two was really shallow, and now you have a 1, 2, 3, 4, 5. So you have another 1, 2 kind of build in. So you probably get it. It looks like you'll probably get another drop to 37 here, looking like that. So it could, it may not. It could be. So again, it's pushing higher. It's pushing the short, squeezing the shorts out, and I would say it seems pretty likely that this peak at 52 is going to break, and probably will come up into the 60s, and then who knows? Then who knows? The Venezuela stock market. Yeah, I know. I mean, I would say you got to keep an open mind about different, catastrophes in the market. The 1929 catastrophe was deflationary collapse. So why, for the wave two down since the beginning of time, perhaps our wave four down is going to be a hyperinflationary event, and maybe the indices don't essentially collapse. Maybe the crisis is in commodities and everything else mooning and getting out of hand of the central bankers. Just think about that. And the market tends to do things in opposites, right? If wave two is a zigzag, wave four is usually a flat, or if a previous crash was short and quick and deep, the next is long and drawn out and sideways. So I think you got to look for that. So like everyone thinks, oh, Great Depression crash, but maybe it's a long and drawn out sideways inflationary market that we're going to live through in the next 20 years. I don't know. I just see the data seems like the central banks just don't have the stomach for deflation. They want to pivot. They want to print. They do stealth QE, backdoor QE. Other central bankers print that we have no control over, and that money finds its way into our markets. Japan loves the print. My God, they love the print, and they love to ease. So, I mean, I just think there's no hope for, I think, any, if you're hoping for deflation, I don't know how. I don't know. I don't think it's in the DNA of the people that lead these nations and bankers. I don't think they just will allow another 1929 event. I think they can't. And then the national debt so much. I think they're thinking, let's inflate our way out of this. I'm just kind of wondering. This is because we're starting to see some craziness that show me But when the metals get out of hand, then we'll know for sure. When we start seeing silver pump, then they've lost. Then we know they've lost it. Yeah, the Feds want this money melt up. I mean, we don't know. There's always a conspiracy. The Fed's political, and they want a stable market because it reflects stability with our governmental system. Around the world, it shows, hey, our democratic system is perfect. Look, our economy's going up, and everybody's happy, and they're making money in the market, and there's no problems here in America with democracy, right? So in some ways, it reflects. They look at it as a as a reflection that their policies are accepted by the masses, and everybody's just so happy and look at us. And some people think the Fed enables that, but that's a conspiracy theory, obviously. So I don't know. The timing of a crash is not predictable. I think at this point, there's no way to know. Because the connector wave that we're in could go on for years. XLE connector wave went on for 10 years, a decade. Some connector waves go on for 10 years in a sideways manner, in a triangle, an ABCD. I mean, so the connector wave, you have to just trade the trend. That's what I'm trying to tell you guys here. Trade the trend, and the trend's higher. And for now, we're gonna trade that trend until the trend changes, and we'll go back to shorting it. But I think trying to top tick the market is not gonna be a smart way to look at this market right now. And is how I'm not looking at that. All right, see, I've got about an hour in. I'll do a couple of these that I have charts on already. TNA I do, I think. Yeah, TNA I have a chart on that already. Um, so TNA is the bull shares. So if it can drop down to 33.74, 33.10, it's a buyable dip here. It's a buyable dip. There is a chance it's already done, but I think it looks like it wants another swing down. So it's a buy here. That's why I have it here, to remind me to maybe buy it. I don't know if I'm going to buy that though. I might buy the individual stocks, not that. So FAS is the bull market for the financials, and it seems to me that it's going to make one more swing up, and then I think it wouldn't be wise to be in it anymore. So I could see it going to 68.71 for the time being. And this is 3 and 3, so a W, X, Y, and an A, B, and now we're in C. Or actually, I'm off by 1 here. There's your B. So as long as you're above 59, it's bullish. And it could be in, like the Dow, right? Isn't this the Dow counts? This is the Dow count, 1, 2, 1, 2, right? I just showed you guys the 1, 2, 1, 2 on the Dow. The same count as the Dow. Yeah. And then it's 3 waves, so it may already be in a buy area. Like you maybe should have bought it on Friday on close. Not yet. So maybe on Monday, 62.72, 62.40 in this area. Somewhere in that area. Like that. So this is a trade. This is a trader's stock. This is an investor's stock. This is a day trader stock to go in here and play this pump and then dump it and get out of it. But do what's best for you. Keep an eye on that one. Okay, Boyle. Boyle made that swing up I mentioned, right? I was telling you guys about that swing up, and it made it. Now we need to look at the other the extension. So this is a pretty significant extension. So that's actually a good sign that maybe this is a bottom here, and it's in a new bull cycle. But I said to get the confirmation, look at natural gas. You need to see it break this high at 268. So until that happens, it's not a home free on Boyle. So you gotta wait and have this 269 break. So I would say Boyle is in indecision mode. It doesn't, it would be a complete like coin flip because it's three waves, so it can continue lower or it can like moon. So we don't know. So it's like a gamble. But if this high breaks at 268, it's going to open up more upside, and I believe the correction will be over, and then we should see it run. So I'm leaning towards it's going higher, guys. I mean, based on my gut and what I'm looking at, but there's just like my gut telling me. But I think you're just gonna have to do what's best for you on it. But this could be a megaphone bottom right here. This could be a megaphone bottom. And again, if you're new to my videos, I called this low here exactly, called the megaphone when we were before it even finished, and then we had 5 up off the low. We were pulling back, and I mentioned we'd get another swing higher, and we did. So this has been predictable so far. This part of the trades, this was very unpredictable here. This has been very predictable so far. So it's well in the buy area, the accumulation area, long-term accumulation area. So I don't know. I mean, we have to wait and see what the dollar does, what oil does, to know for sure. LODE. Like I said, I gotta skip over some of these if I don't have them. I think I may have LODE. I don't know, and I don't have it. Um, Is that a stock or crypto? Comstock? I would assume it's crypto, but I'll have to skip over it. You can put it in the comments later. Um, okay, if you shorted at 372. Now, my other video, I did tell you about a pullback potentially in the Nasdaq. We would get one because the SQQ hit this. Well, it didn't actually hit it. It's still not there, but it got close enough. It got to the Fibonacci extension at 1849. So I said it's almost guaranteed you're going to get a reaction higher here, almost guaranteed. So we may see this. This could react higher to 23, but I don't think it could get much more than 23. But it could still react higher. So that's why technology could be entering a correction while other sectors run. So just keep that in mind. But yeah, if you're in this, I mean, as a short-term trader, when I look at this, you have 3 waves, so you're at risk of a bounce. Let's look at here. You've got actually maybe 5 waves, yeah, with divergence. But see, it could be a flat, an A, B, C. So if you're really have a lot of leverage and you're short in like I would usually do when I do it, I would probably be taking profit here because it tagged my 367.58. It tagged it and bounced. So not to say it can't go lower based on what I showed you on this that other chart, but it didn't tag the Fibonacci level yet. So perhaps it can make one more high, and maybe even I'll be tempted to short tech just to play the Fibonacci level if it does actually hit it on Monday for some reason. If I can get, if this can tag 1844, I mean we missed it by like 20 cents, but if it could just drift back down here to 1850, I'll probably give it a try myself just to see, because you really want to get a reaction to where this comes back up to 23. And then that should really pull back tech back down to maybe 353, 52 down to this area. So I think you'll know Monday, because if you open up with a gap down and run on Monday, then you know it's heading down to 352, and you have a really good trade on that. I would just let it run. But if it's green futures and all that shit on Tuesday, I mean, because markets closed Monday, but like green future, then I would expect it to do that, and then I would be really look on the lookout for a big pullback, but it's a buyable dip, like I showed you earlier. But the pullback will be big. Um, Zoom I did earlier in my call, so you guys can go watch that later. I can't do the new charts because I got to get off here, and we'll do the new ones later. Uh, I just don't like MicroStrategy's chart. I mean, it obviously should go higher with Bitcoin, but I'm not in the chart. I'm not in Coinbase. I don't like their charts. They have irregular bottoms, and it doesn't have good looks to it to me. So I'm staying away from those two. But they should go higher as the market goes higher. Yeah, IWM should have I think a squeeze pop, and then it's decision time for the market. I think it's gonna consolidate and pop, and then you could have this crash moment. So that's what I'm looking for on IWM, something like this. If China economy is weak, so is this. I'm not sure what you mean by that. I mean, China is weak, youth unemployment super high, but they're talking stimulus, and the government brought business leaders together to in China to come up with ways to restart their economy again. And so there could be emerging news that could be the new narrative that pushes the market, the Dow, the cyclicals, the energy sector higher, because maybe China's going to unlaunch a tsunami of stimulus in the next couple weeks. So keep an eye on that news event, because that's out there, that's out there, um, that's out there. Okay, lower their interest rate. That's interesting. Yeah, I think something bullish is coming out of China that's going to help the world markets, give it a reason to keep going higher. But I do, like I said, when you look at these bottoms, this is typically not how these indices bottom or stocks. So this connector wave can go on for a long time, years and years, right? But it should end. So I just think the realistic path is it's gonna spike and crash, and I think the Dow has a similar setup, and we saw that in 1987, the spike and the crash. So I think that's what I'm looking for, and then the Qs, maybe it gets lucky and could make an all-time high to top it at 5 and then pull back. So I mean that's the forecast, but in the meantime, I think you should just trade what the market's giving you and buy dips, where they show up. Buy dips where they show up. And short, and if technology wants to bounce and make a high to 375, take a short, try it, see what happens, because the Qs are in this SQQ is at a fib level that should generate a pretty good bounce. I mean, so you just got to trade both sides. You got to trade what's coming and not fall in love with things, and just go with it until proven otherwise. Um, Yeah, I got to learn more about yield curve controls, but if they're trying to do that, that's essentially right monetizing the debt to keep the interest rates low artificially. So they're going to print money to buy bonds. So that's probably why the yen is tanking, which pumps our markets. Which pumps our markets, right? So I think we're going to wrap it up here. So this was just kind of a Q&A session. I do think it's expected to be choppy. We should get some violent pullbacks, and we'll go from there. And I was just looking through the comments. Oh yeah, what could crash the market right away in the Qs? You know, fundamentally, news-wise, would be what started the correction to begin with. It was the fear of rate increases from the Federal Reserve. So it would be the Feds doing, starting rate hiking cycle again. So which would mean a hot CPI. So I think what could crash tech CPI for, I guess, July comes out and it's like 6 or 7% or something ridiculously high, then technology, this game over. Technology will be limit down. It'll be it. But of course, what's the odds of that happen? We don't know. I mean, but maybe that's how it ends, right? And maybe that's how this wave five eventually ends too. The CPI finally just gets too hot, and then boom, it crashes. So I don't know, but that's probably how it all comes undone. The other is earnings, massive earnings shortfall, which is how the dot-com bubble burst, right? It well, not burst, but how it the connector wave ended. The connector wave ended when tech missed their earnings and they had to slash their guidance like significantly. But even Apple wasn't that significant. But Apple lost 50% in one day. Their stock dropped 50% in one day. Apple did when they missed earning forecast in a connector wave off the dot-com, and that ushered in the massive decline. So what if going into Q2 earnings, we get earnings warnings? Microsoft, we're missing earnings, or Apple, we didn't sell enough iPhone. That could start a massive panic, I think, too. Now, do we think that's going to happen? I mean, we just saw Adobe's earnings. they're pretty good. So I think people, if certain tech companies are going to support this market, even if the others falter. So like it's obvious, Nvidia is good, Adobe's good. Some of these other sectors are going to be fine. Like Microsoft should be okay, but the consumer related ones probably are still at risk of surprising to the downside on earnings. So that's why I'm not like FOMOing in Nike, for example. Nike, I won't fall like, and even Tesla, I'd be careful of. Although Tesla has Bitcoin, right? It owns Bitcoin. If Bitcoin pumps, I think that tends to pump it too. All right, so we'll see where we go. But yeah, we're in a huge bubble, and let's enjoy the ride, get the easy money, and then yeah, when it crashes, it's gonna be a catastrophe, a tragedy of epic proportions for the world and people all over. But it will eventually end. But for right now, they want